The current price trend for Bitcoin suggests a potential for short-term consolidation. While the price has seen some fluctuations, it appears to be hovering around the support level of $96,443.38. The forecast price indicates a slight downward movement in the coming week, with prices potentially reaching around $96,400. Given this outlook, a short-term short position could be considered. Entering a short position at the current market price of $97,600 with a stop loss at $97,856.50, slightly above the resistance level, would limit potential losses. The target price for this short position could be set at $96,443.38, the support level, aiming to capitalize on the potential downward movement predicted by the forecast. This strategy focuses on a short-term opportunity, aiming to profit from the anticipated price correction before the market potentially stabilizes or reverses its trend. Based on the provided information for Bitcoin Cash, a cautious investment strategy focused on the short term appears most suitable. The historical price data reveals a fluctuating trend, with a recent dip towards the end. While the forecast predicts a downward trajectory over the next week, the support price at $316.1 offers a potential floor for the price. Therefore, an entry price around $318, slightly above the support level, would allow for a potential buy-in at a relatively low point. A stop loss at $315, just below the support, would limit potential losses. The target price could be set at $330, aligning with the historical price range and allowing for a modest profit if the price rebounds. This strategy prioritizes risk management and aims to capitalize on a potential short-term price reversal within the established support and resistance levels. Based on the provided price history and forecast for stacks, a short-term bearish strategy appears to be the most suitable. The price history shows a downward trend, and the forecast indicates further declines in the coming week. The support price at $0.864 acts as a potential floor for the asset, while the resistance at $0.987 suggests limited upward movement. Therefore, an aggressive short-term investment strategy would involve entering a short position at the current price close to $0.934. Setting a stop loss at $0.987 would limit potential losses if the price unexpectedly surges. The target price could be set at $0.864, aiming to capitalize on the predicted decline towards the support level. This strategy capitalizes on the bearish sentiment indicated by both the historical price data and the price forecast, aiming to profit from the anticipated price drop in the short term. Given the price trends and forecast for Ethereum, a cautious investment strategy would focus on a short-term approach. The historical prices show a mixed trend with both upward and downward movements, suggesting volatility. The current price is close to the support level of $2,598.59, indicating a potential for a bounce back. However, the forecast suggests a slight downward movement in the coming week. Therefore, a short position could be considered for a short-term investment. An entry price of $2,670, aligning with the recent price action and slightly above the support level, would be suitable. The stop loss should be set at $2,720 to limit potential losses if the price unexpectedly moves upwards. The target price should be set at $2,590, slightly below the support level, allowing you to take profits if the forecast holds true. This strategy aims to capitalize on the potential for a short-term decline in Ethereum while managing risk effectively. Based on the provided information for XRP, a medium-term investment strategy appears most suitable. The 2-week price history shows some volatility but generally trends upward. The forecast indicates continued upward movement, reaching a potential peak around $2.89 in the coming week. However, the price is currently near the support level of $2.42, suggesting a potential for consolidation or a slight pullback before resuming its upward trajectory. Therefore, a long position is recommended for a medium-term investment strategy. An entry price around $2.54, close to the current price and above the support level, would be prudent. The stop loss should be set at $2.42 to limit potential losses in case of a significant price drop. The target price could be set at $2.75, aligning with the forecast and offering a reasonable profit margin within a medium-term timeframe. This strategy allows for capitalizing on the expected upward trend while mitigating risks associated with market volatility. Based on the provided data for Binance Coin, a bullish investment strategy appears promising. The historical prices demonstrate an overall upward trend, with recent fluctuations around the $640 to $660 range. The forecast price suggests continued growth, reaching around $650 to $654 in the coming week. Furthermore, the support price at $619.61 provides a solid foundation for potential price increases. Considering these factors, a long position in Binance Coin seems appropriate. To implement this strategy, an entry price around $630 would be suitable, allowing for potential upside as the price moves towards the forecast range. A stop-loss order at $618 would help mitigate risk by exiting the position if the price drops below this level. The target price could be set at $660, aiming to capitalize on the potential upward movement and reach the resistance level. This strategy focuses on short to medium-term gains, leveraging the positive price momentum and forecast for Binance Coin. Based on the provided price information for Stellar, a cautious investment strategy focusing on the short term appears most suitable. The historical price data reveals a fluctuating trend with recent dips, while the forecast predicts a further decline in the coming week. The support price sits at $0.3489, indicating a potential floor for the price, while the resistance level at $0.393 suggests an upper limit for potential growth. Given these factors, a short position is recommended. An entry price near $0.340 could allow for capturing potential downward movement. A stop loss should be set at $0.350 to limit potential losses if the price unexpectedly rises. A target price of $0.325, slightly below the forecast's lowest point, offers a reasonable profit target while allowing room for market fluctuations. This strategy prioritizes risk management and capitalizes on the anticipated short-term price decline. Based on the provided data for Toncoin, the investment strategy suggests a short-term bearish approach. The historical price data shows a slight upward trend, but the one-week forecast indicates a decline. The forecast price suggests Toncoin could drop from its current level towards the support price. This bearish outlook, coupled with the forecast's downward trajectory, makes a short position the most suitable strategy for capitalizing on the anticipated price decline. To implement this strategy, an entry price of $3.80 would be appropriate, aligning with the current price and allowing for potential profit as the price moves towards the forecast. The stop loss should be set at $3.88 to protect against any unexpected upward movement. The target price should be set at $3.55, a conservative target that accounts for the potential volatility of the market while still allowing for a reasonable profit margin. This strategy capitalizes on the short-term bearish sentiment indicated by the forecast while managing risk through a well-defined stop loss. The recent price action of Cardano suggests a potential for short-term gains. While the price has experienced some volatility, the overall trend appears to be downward. The forecast price indicates further declines in the coming week, suggesting a bearish outlook. Given this, a short-term short position on Cardano could be profitable. An entry price around $0.785, near the current market price, would allow for quick entry into the trade. A stop-loss order should be placed at $0.798, slightly above the current price, to limit potential losses. The target price could be set at $0.704, aligning with the lower end of the forecast price range. This strategy capitalizes on the anticipated price decline while managing risk through a well-defined stop-loss order. Based on the provided Litecoin price information, a medium-term investment strategy appears to be the most suitable. The historical price data shows a consistent upward trend, reaching $133 in the recent past. The forecast price also suggests continued growth, with a projected peak of $133. This positive outlook, coupled with the support price of $129.70, indicates a strong foundation for a potential price increase. However, the resistance price of $140.1 suggests that significant upside momentum might be limited in the short term. Therefore, a long position on Litecoin is recommended for a medium-term investment strategy. A suitable entry price would be around $125, slightly below the current price and providing a margin of safety. The stop loss should be set at $124, just below the recent support price, to limit potential downside risk. The target price can be set at $138, aiming to capture a significant portion of the projected price increase while leaving room for potential upside surprises. This strategy allows for capitalizing on the positive price momentum while mitigating risk through a well-defined stop loss. Based on the provided price information for Coin, a short-term bearish investment strategy appears to be the most suitable approach. The 2-week price change demonstrates a downward trend, and the 1-week forecast predicts further declines. While the support price sits at $2.9931, the resistance level at $3.5814 suggests limited upward potential in the near future. Therefore, an aggressive short-term investment strategy would involve taking a short position on Coin. A suitable entry price would be $3.30, slightly above the current price and near the recent peak. To manage risk, a stop-loss order should be placed at $3.45, aiming to limit potential losses. The target price for this short position could be set at $3, aligning with the lower end of the forecast and allowing for a decent profit margin before reaching the support level. This strategy capitalizes on the anticipated price decline while mitigating potential downside risks. The Aptos price data suggests a potential for short-term bearish movement. The 2-week price change shows a slight decline, and the forecast price indicates further downward movement over the next week. While the support price sits at $5.68, the resistance level is at $6.20, suggesting a limited upside potential in the near term. Given these factors, a short-term short position appears to be the most suitable strategy. To execute this strategy, an entry price of $6.05 would be appropriate, aligning with the current price and the forecast's downward trajectory. A stop loss at $6.17 would protect against unexpected price surges, while a target price of $5.70 would allow for profit-taking before the price potentially rebounds. This strategy aims to capitalize on the anticipated downward movement in Aptos while managing risk effectively. First, analyzing the provided data for SE, we observe a recent downtrend in the historical prices. The forecast also suggests further declines in the coming week. Considering these factors, a short-term bearish strategy appears more suitable. We should aim to capitalize on the anticipated price decrease. Given this outlook, an investment strategy could involve entering a short position at the current market price, around $0.234. A stop-loss order should be placed slightly above the current price, at $0.242, to minimize potential losses if the price unexpectedly rises. The target price would be set at $0.2155, aligning with the support price, aiming to capture a significant portion of the anticipated decline. This strategy prioritizes short-term gains by leveraging the bearish trend indicated by both historical data and the price forecast. Based on the provided Ethereum Classic data, a cautious investment strategy focusing on a short-term perspective appears most suitable. The historical price data reveals a downward trend over the past 2 weeks, with the forecast indicating further declines. The Ethereum Classic price is currently hovering near the support level of $20.69, suggesting potential for further downside movement. Therefore, a short position is recommended to capitalize on the anticipated price decline. An entry price of $20.80, slightly above the support level, would allow for some margin of safety. The stop loss should be set at $21.40, the resistance level, to limit potential losses if the price unexpectedly rebounds. The target price can be set at $19.50, aligning with the lower end of the forecast range, aiming to secure profits before the price potentially finds support. Based on the provided information for Polygon, a short-term bearish strategy appears to be the most prudent approach. The forecast price indicates a downward trend over the next week, suggesting a potential decline in Polygon's value. Furthermore, the historical price data shows a recent dip, reinforcing the bearish sentiment. Considering these factors, a short position at the entry price of $0.318, near the current price, would be suitable. The stop loss should be placed at $0.323, slightly above the current price, to minimize potential losses if the price unexpectedly rises. The target price could be set at $0.2967, aligning with the support price and representing a reasonable profit target based on the forecast. This strategy capitalizes on the anticipated price decline while managing risk effectively. Based on the provided AEVO data, a cautious investment strategy focusing on the short term appears most suitable. The 2-week price change reveals a downward trend, and the forecast suggests further declines in the coming week. The historical price data shows a consistent downward trajectory, currently hovering near the support price of $0.1488. This indicates a bearish outlook in the short term, making a short position the most suitable strategy to capitalize on the anticipated price decline. To execute this strategy, an entry price of $0.160 would be appropriate, aligning with the current price and the downward trend. A stop loss should be set at $0.167 to protect against unexpected upward price movements. The target price should be set at $0.135, slightly above the forecasted lowest price, allowing for profit taking before the market potentially reaches major support. This strategy aims to capitalize on the short-term bearish momentum of AEVO while minimizing potential losses. Optimism's recent price history shows a slight downward trend, with the forecast suggesting further declines. Although the support price is at $1.014, the forecast indicates a potential drop below this level. Considering the bearish outlook and the potential for further price declines, a short position on Optimism appears to be the most suitable strategy. An aggressive short-term investment strategy could involve entering a short position at the current price, around $1.07. The stop loss should be set at $1.09 to protect against any unexpected price rallies. The target price could be set at $1.02, aligning with the lowest forecast price, allowing for potential profits before the market potentially finds support. This strategy capitalizes on the anticipated downward price movement while mitigating risk with a defined stop loss. Given the price trends and forecast for STRK, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend over the past 2 weeks, and the forecast predicts further declines in the coming week. While the price has shown some minor fluctuations, the overall trajectory suggests a bearish outlook. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of 24 cents, aligned with the current price and the forecasted decline, would be appropriate. The stop loss should be set at $0.246, slightly above the current price, to protect against any unexpected upward movement. The target price should be set at 19 cents, slightly above the lowest forecasted price, allowing you to take profits before the market potentially rebounds. This strategy aims to capitalize on the short-term bearish momentum while managing risk effectively. Given the provided price information for Solana, the historical data suggests a fluctuating trend with no clear upward or downward dominance. The forecast, however, indicates a slight downward movement over the next week. Considering this, a short-term bearish strategy seems more appropriate. We propose entering a short position at the current price of around $196. The stop loss should be set at $200 to protect against unexpected price surges. The target price could be set at $185, aiming to capitalize on the forecasted downward movement while leaving room for potential price fluctuations. This strategy focuses on capitalizing on the short-term bearish sentiment indicated by the forecast while managing risk through a defined stop loss. Based on the provided price data for Jupiter, a cautious medium-term investment strategy appears most suitable. The historical price shows a fluctuating trend with no clear upward or downward momentum. The forecast suggests a slight increase in price, but the range remains relatively narrow. The support price of $0.8235 indicates a potential floor for the price, while the resistance price of $0.9522 suggests an upper limit for the foreseeable future. Given this analysis, a long position on Jupiter is advisable for a medium-term investment horizon. An entry price around 86 cents, slightly above the recent price action and near the support level, would provide a good starting point. A stop-loss order set at $0.8235 would protect against significant price drops. The target price could be set at $0.934, aiming to capture a portion of the potential upside within the forecast range. This strategy balances risk and reward, allowing for potential profit while mitigating the impact of potential price fluctuations. Based on the provided data for render, a cautious investment strategy is recommended. The 2-week price history shows a volatile trend, with prices fluctuating around the $4.40 level. While the forecast indicates a slight upward movement in the coming week, the historical data suggests that the price could easily drop back down. Considering the support price at $4.12 and the resistance at $4.722, a short-term investment perspective is most suitable. Therefore, a cautious long position is suggested, aiming to capitalize on a potential short-term price increase. An entry price near the current market price, around $4.50, is recommended. The stop loss should be placed slightly below the support price, at $4.10, to minimize potential losses. The target price should be set at $4.70, aiming to capture a significant portion of the potential upward movement before the price potentially faces resistance. Based on the provided historical price data and forecast for Solana name service, a short-term bearish investment strategy appears to be more suitable. The 2-week price change shows a downward trend, and the forecast indicates further declines. The support price is at $0.1366, suggesting a potential floor for the price. However, the resistance price is at $0.1522, indicating a strong barrier to upward movement. Therefore, a short position on Solana name service is recommended. An aggressive entry price could be around $0.148, slightly above the current price and below the resistance level. The stop loss should be set at $0.151, slightly above the entry price, to limit potential losses if the price unexpectedly rises. The target price could be $0.137, aiming to capture the potential decline towards the support level. This strategy capitalizes on the bearish sentiment and anticipated price movement while managing risk through a defined stop loss. Remember that this is a short-term strategy, and the market can be unpredictable. Doge-Coin's recent price history demonstrates volatility, ranging from $0.246 to $0.272. The forecast, however, suggests a potential downward trend in the coming week, with prices predicted to dip towards 25 cents. Considering this bearish outlook, a short-term investment strategy focused on a short position seems prudent. An optimal entry price for this strategy would be around $0.264, slightly above the current price and close to the recent resistance level. This allows for a small margin of safety while still capitalizing on the anticipated price decline. A stop-loss order should be placed at $0.272, just above the recent high, to limit potential losses if the price unexpectedly surges. The target price for this trade could be set at $0.248, aiming to capture a decent portion of the predicted downward movement. This strategy leverages the short-term bearish forecast while incorporating risk management measures to protect against unforeseen price fluctuations. Given the provided historical price data and forecast for PEPE, a cautious short-term investment strategy seems appropriate. The historical prices demonstrate a consistent downward trend, with the forecast suggesting further declines in the coming week. The current price is hovering near the support level, indicating a potential for further downward movement. Therefore, a short position on PEPE is recommended. An entry price around $0.000000970, slightly above the current price, would allow for a quick entry into the trade. A stop loss should be set at $0.0001030 to limit potential losses if the price unexpectedly rebounds. The target price could be set at $0.000000880, aiming to capitalize on the anticipated decline towards the support level. This strategy prioritizes risk management by setting a stop loss and focuses on short-term gains based on the bearish forecast. Based on the provided SHIB price data, a short-term investment strategy appears most suitable. The historical price fluctuates within a relatively narrow range, suggesting a consolidation period. The forecast prices indicate a slight downward trend, aligning with the recent price action. This suggests a potential for a short-term decline. Therefore, a short position on SHIB is recommended. An entry price around $0.0000157 would allow for capturing the potential downward movement. The stop loss should be set slightly above the entry price at $0.0000160 to manage risk. The target price could be set at $0.0000149, aiming to capitalize on the anticipated decline while staying mindful of potential support levels. This strategy prioritizes capital preservation while aiming for modest gains within a short time frame. Given the historical price data and the one-week price forecast for Dog with Hat, a cautious short-term investment strategy appears most suitable. The historical prices show a fluctuating trend with a downward bias, while the forecast predicts further price declines. The current price is hovering near the support level of 65 cents, suggesting a potential bounce. However, the forecast suggests that this bounce might be short-lived, with prices likely to dip below the current level. Therefore, a short position would be more aligned with the prevailing trend. An entry price of 65 cents, aligning with the support level, would allow for a quick entry if the price bounces slightly. The stop loss should be set at $0.726, the recent resistance level, to protect against an unexpected price surge. The target price could be set at 59 cents, slightly above the forecasted lowest price, aiming to capture a portion of the anticipated decline. This strategy prioritizes risk management while seeking to capitalize on the short-term bearish outlook for Dog with Hat. Based on the provided information for Doge-Coin, a short-term bearish investment strategy appears to be the most suitable. The 2-week price change shows a downward trend, and the 1-week forecast predicts further declines. The price is currently hovering near the resistance level of $0.006149, suggesting a potential for a pullback. Therefore, an aggressive short-term investment strategy would involve taking a short position at the current price of $0.00303. The stop loss should be set at $0.00315 to limit potential losses if the price unexpectedly rises. The target price for this trade could be $0.00255, aligning with the support price and the forecast indicating a potential decline to that level. This strategy aims to capitalize on the anticipated downward momentum of Doge-Coin in the short term. The historical price data for NEAR protocol suggests a volatile but generally sideways trend. While the forecast indicates a potential dip in the coming weeks, the support level at $3.201 provides a potential floor for the price. Considering this, a short-term investment strategy focusing on a long position might be suitable. An entry price around $3.25, slightly above the support level, allows for a buffer against immediate downside risk. A stop-loss order at $3.18 would help limit potential losses if the price drops below the support level. The target price could be set at $3.50, aligning with the recent highs and factoring in the potential for a rebound. This strategy capitalizes on the potential for a short-term price increase while managing risk through a well-defined stop-loss order. Based on the provided information about Internet Computer, a short-term bearish strategy appears to be the most prudent approach. The 2-week price change demonstrates a downward trend, and the forecast indicates further declines. While the support price offers a potential floor, the resistance level is relatively far away. Therefore, an aggressive short-term investment strategy would involve opening a short position at the current price, around $7.13. A stop-loss order should be placed at $7.37, above the recent high, to limit potential losses. The target price for this strategy would be $6.57, the lowest point predicted in the forecast, allowing for a profit margin before the price potentially rebounds. This strategy capitalizes on the anticipated decline in Internet computers' price while managing risk through a well-defined stop-loss order. Based on the provided injective price history and forecast, a cautious investment strategy is recommended. The 2-week price change shows a slight downward trend, and the forecast predicts further declines. While the support price is at $13.15, the forecast suggests prices could dip below this level. Given this bearish outlook, a short position on injective appears more suitable. An entry price of $14 could be considered, allowing for a small margin above the current price and recent highs. A stop loss should be placed at $14.50 to limit potential losses if the price unexpectedly rises. The target price could be set at $12.50, aiming to capitalize on the projected downward movement. This strategy prioritizes risk management while seeking to profit from the anticipated price decline. Given the price trends and forecast for BTC, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend over the past 2 weeks, with the current price hovering near the support level of $365.60. The forecast suggests BTC could drop further, reaching as low as $327 in the coming week. This indicates a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. For an aggressive short-term investment strategy, an entry price of $360 would be ideal, aligning with the current price and allowing for a potential drop towards the forecast low. The stop loss should be set at $370 to protect against any unexpected price recovery. The target price should be set at $320, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $365.60. The current price trends and forecasts for THETA network suggest a bearish outlook in the short term. The historical prices show a downward trend over the past 2 weeks, and the forecast predicts further declines in the coming week. The support price sits at $1.283, while the resistance is at $1.439. This indicates that THETA network is likely to move lower in the near future. Therefore, an aggressive short-term investment strategy would involve taking a short position on THETA network. A suitable entry price would be $1.38, aligning with the current price and the recent downward trend. The stop loss should be set at $1.439 to limit potential losses if the price unexpectedly rises above the resistance level. The target price should be $1.283, aiming to profit from the anticipated price decline towards the support level. This strategy capitalizes on the bearish momentum and aims to generate returns in the short term. The price history of WorldCoin shows a downward trend over the past 2 weeks, with the forecast indicating further declines. The current price is hovering near the support level of $1.223, suggesting that the downward pressure might continue. Considering the bearish outlook and the potential for further price drops, a short position on WorldCoin appears to be the most suitable strategy. An aggressive short-term investment strategy could involve entering a short position at the current price of $1.28. The stop loss could be placed at $1.36, slightly above the recent high, to protect against any unexpected upward movement. The target price could be set at $1.15, aligning with the lowest predicted price in the forecast. This strategy aims to capitalize on the anticipated decline in WorldCoin's price while managing the risk through a well-defined stop loss. Based on the provided hooked protocol price information, a cautious investment strategy with a medium-term perspective appears most suitable. The recent 2-week price history reveals a fluctuating trend, with prices dipping below 18 cents and subsequently rebounding. The forecast predicts a continued downward trend, suggesting potential for further decline in the near term. However, the support price at $0.1748 indicates a potential floor for the price, limiting significant downside risk. Therefore, a long position could be considered with a cautious approach. An entry price around $0.185 could allow for potential profit if the price rebounds towards the resistance level of $0.3532. A stop loss should be set at $0.175 to mitigate risk in case the price falls below the support level. The target price could be set at 25 cents, aiming for a moderate profit within a medium-term timeframe. This strategy allows for potential gains while managing risk through a defined stop loss and a realistic target price. Based on the provided price data and forecast for Artificial Superintelligence Alliance, a cautious short-term investment strategy appears most suitable. The 2-week price history reveals a downward trend, and the 1-week forecast predicts further declines. This suggests a bearish outlook in the short term, making a short position a potentially profitable choice. The price is currently hovering near the support level of $0.716, indicating a potential bounce, but the forecast suggests a continued downward movement. Therefore, an entry price around $0.757, slightly above the current price and the recent support level, would allow for a small margin of safety. A stop loss at $0.777 would limit potential losses if the price unexpectedly rebounds. The target price could be set at $0.716, aligning with the support level and aiming to capitalize on the anticipated decline. This strategy focuses on a short-term opportunity to profit from the predicted price drop in Artificial Superintelligence Alliance, with a focus on risk management through a well-defined stop loss. Based on the provided data for Polkadot, a cautious investment strategy focusing on the short term seems most appropriate. The 2-week price change demonstrates a slight downward trend, and the forecast predicts further declines. While the support price at $4.51 offers a potential floor, the resistance at $6.165 is relatively distant, suggesting limited upside potential in the near future. Therefore, a short position on Polkadot is recommended. An entry price around $4.85, near the current price but slightly above the predicted low, would allow for a small margin of safety. The stop loss should be set at $4.95 to minimize potential losses if the price unexpectedly rises. The target price can be set at $4.63, aligning with the lowest predicted price in the forecast. This strategy aims to capitalize on the anticipated price decline while managing risk through a well-defined stop loss. Given the price trends and forecast for Filecoin, a cautious investment strategy would focus on a short-term approach. The historical prices show a recent downward trend, with the forecast indicating further declines. The forecast suggests Filecoin could drop from its current price to as low as $3.03, while the support price sits at $3.129 and resistance at $4.93. This indicates a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An aggressive short-term investment strategy could involve an entry price of $3.35, aligning with the recent price action and the forecast. The stop loss should be set at $3.42 to protect against any unexpected price recovery. The target price should be set at $3.05, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $3.129. Given the provided price history and forecast for Conflux, a cautious investment strategy focusing on the short term appears most suitable. The historical prices demonstrate a recent downward trend, with the forecast predicting further declines. The current price is situated near the support level of $0.107, indicating a potential for a bounce. However, the forecast suggests a continued downward movement, making a short position a more prudent choice. An aggressive short-term investment strategy could involve entering a short position at $0.118, the current price. The stop loss should be placed at $0.121, slightly above the recent resistance, to minimize potential losses. The target price could be set at $0.107, aligning with the support level, allowing for a profit if the forecast holds true. This strategy capitalizes on the anticipated price decline while mitigating risk through a well-defined stop loss. Ethereum name service is currently in a bearish trend based on the 2-week price change and the 1-week price forecast. The forecast predicts a continued decline in price, reaching as low as $25. The historical price data also shows a downward trend. Given this information, a short-term bearish strategy would be suitable for Ethereum name service. An aggressive short-term investment strategy would involve entering a short position at $26, the current price close to the resistance level. The stop loss should be set at $27, slightly above the current price, to protect against any unexpected upward movement. The target price should be $25, the forecasted lowest price, allowing for potential profit before the market reaches major support. This strategy aims to capitalize on the anticipated price decline in Ethereum name service over the short term. Given the price trends and forecast for Avalanche, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend, with the current price hovering near its support level of $24.38. The forecast suggests further declines, potentially reaching as low as $23. This indicates a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An aggressive short-term investment strategy would involve entering a short position at $25, the current price, with a stop loss at $26, slightly above the current price to protect against unexpected price surges. The target price would be set at $23, aligning with the forecasted lowest price, allowing you to take profits before the market potentially rebounds. This strategy capitalizes on the potential for a short-term price dip while managing risk through a defined stop loss. Given the price trends and forecast for Bitcoin, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend over the past 2 weeks, with the current price hovering near the support level of $0.03313. The forecast suggests Bitcoin could decline further, reaching as low as $0.0311 in the coming week. This indicates a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $0.034 would allow you to initiate a short position near the current price, with a stop loss set at $0.0353 to protect against any unexpected price surge. The target price should be set at $0.032, aligning with the forecasted lowest price, allowing you to take profits before the market potentially rebounds. Based on the provided price information for PENDLE, a medium-term investment strategy appears most suitable. The historical prices demonstrate a general upward trend, with the recent price hovering around $3.39. While the forecast suggests a slight pullback in the short term, the long-term outlook remains positive. Therefore, a long position is recommended. An ideal entry price would be $3.35, slightly below the current price, allowing for a margin of safety. The stop loss should be set at $3.25 to protect against unexpected downward movement. The target price could be set at $3.70, aligning with the resistance level and anticipating a potential price surge in the medium term. This strategy capitalizes on the anticipated upward momentum while mitigating risk through a well-defined stop loss. Based on the provided price history and forecast for the sandbox, a cautious short-term investment strategy appears most suitable. The price history shows a recent downtrend, and the forecast indicates further declines over the next week. The support price at $0.3684 suggests a potential floor for the price, while the resistance at $0.4057 indicates a barrier to upward movement. Given this outlook, a short position could be considered to capitalize on the anticipated price decrease. An aggressive entry point for a short position could be around $0.396, aligning with the recent price action and the upper end of the current price range. A stop-loss order should be placed above the entry price at $0.406 to limit potential losses if the price unexpectedly rebounds. The target price could be set at $0.368, slightly above the support level, allowing for a reasonable profit margin while minimizing the risk of a prolonged downtrend. This strategy prioritizes risk management and aims to capitalize on the short-term bearish momentum observed in the sandbox's price data. The recent price history of Decentraland suggests a period of consolidation with some downward pressure. While the forecast indicates a continued decline, the historical price data shows support at $0.3114, indicating potential for a bounce. Given this mixed outlook, a short-term investment strategy with a focus on a short position seems most appropriate. An aggressive entry point for a short position could be around 34 cents, slightly above the current price and near the recent resistance level. This allows for a potential profit if the forecast price of $0.294 is realized. A stop loss could be set at $0.352 to limit potential losses if the price unexpectedly moves higher. The target price should be set at $0.305, providing a reasonable profit margin while allowing room for price fluctuations. This strategy capitalizes on the potential for a short-term price decline while managing risk through a well-defined stop loss. ENG Coin's recent price history shows some volatility but generally remains within a range. The forecast suggests a slight downward trend over the next week. Considering these factors, a short-term bearish strategy appears to be the most suitable approach for ENG Coin. We should aim to capitalize on the potential price decline indicated by the forecast. An ideal entry point would be around $0.125, slightly above the current price, allowing for a small margin of safety. The stop loss should be set at $0.128 to limit potential losses if the price unexpectedly rises. The target price could be set at 11 cents, which aligns with the lower end of the forecast range. This strategy allows us to potentially profit from the anticipated price decrease while managing risk effectively. Given the price trends and forecast for Uniswap, a cautious investment strategy would focus on a short-term approach to manage risk. The historical prices show some volatility, with recent fluctuations around the $9 mark. While the forecast suggests a slight dip in price over the next week, the support price at $8.993 provides a potential floor for the asset. This indicates a sideways to slightly bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the potential for a price decline towards the support level. An entry price of $9.10 aligns with the current price and the forecast, while a stop loss at $9.25 protects against any unexpected upward movement. The target price should be set at $8.95, aiming to capture a modest profit before the price potentially bounces back. This strategy balances the potential for gains with risk management, taking advantage of the short-term price forecast while minimizing potential losses. Based on the provided information for Chainlink, a short-term investment strategy appears most suitable. The historical price data reveals a consistent downward trend over the past 2 weeks, with the forecast indicating further declines. This suggests a bearish outlook for Chainlink in the short term. Therefore, a short position is recommended. An ideal entry price would be $19, aligning with the current price and the recent lows. A stop-loss order should be placed at $20 to limit potential losses if the price unexpectedly rebounds. The target price should be set at $18, slightly above the forecasted lowest price, allowing for profit-taking before the market potentially finds support near the support price of $18.52. This strategy capitalizes on the anticipated price decline while managing risk effectively. Based on the provided information for Aave, a cautious investment strategy focusing on the short term would be advisable. While the historical price data shows some volatility, the forecast suggests a potential downward trend over the next week. The current price is relatively close to the support price, indicating that further downside movement might be limited. Therefore, a short position could be considered with an entry price near the current market price, aiming to capitalize on the potential price decline. A stop-loss order should be placed above the current price to limit potential losses if the price unexpectedly rises. The target price could be set slightly below the support price, allowing for a reasonable profit margin while mitigating the risk of a significant price reversal. This strategy allows for a balanced approach, aiming for modest gains while minimizing potential losses in the short term. Given the price trends and forecast for EOS, a cautious investment strategy would focus on a short-term approach to capitalize on potential price fluctuations. The historical prices show a recent downtrend, with the current price hovering near the support level of $0.5792. The forecast indicates a continued downward trend, with prices potentially reaching as low as $0.605 in the short term. Therefore, a short position is advisable to take advantage of this potential decline. An entry price of $0.631, aligning with the current price, would be suitable. The stop loss should be set at $0.651, slightly above the recent high, to protect against any unexpected upward movement. The target price should be set at $0.590, below the support level, allowing for potential profit before the price reaches major support. This strategy allows for a measured approach, capitalizing on short-term price fluctuations while mitigating risk with a well-defined stop loss. Given the price trends and forecast for Tron, a short-term investment strategy appears to be the most suitable approach. The historical prices show a slight upward trend, but the forecast suggests a potential pullback in the coming week. The support price at $0.2224 provides a safety net, while the resistance at $0.2542 indicates a potential ceiling for the upward movement. Therefore, a short position is recommended to capitalize on the anticipated decline in prices. An entry price of $0.238, slightly above the current price, allows for a buffer against any unexpected price surges. The stop loss should be set at $0.241, protecting against potential upward movement. The target price should be set at $0.225, aiming to capture a portion of the anticipated decline before the price reaches the support level. Given the price trends and forecast for Suncoin, a cautious investment strategy would focus on a medium-term approach. The historical prices show a slight upward trend, but the forecast indicates a potential pullback in the coming weeks. The current price is close to the resistance level of $0.019, suggesting that further upward movement might be limited. However, the support price of $0.01784 provides a safety net for potential price drops. Therefore, a long position is advisable, aiming to capitalize on the potential for a rebound after a short-term correction. An entry price of $0.0185, slightly below the current price, allows for a margin of safety. The stop loss should be set at $0.01784 to minimize potential losses if the price drops below the support level. The target price could be set at $0.019, aiming to capture the potential upside momentum once the market stabilizes. This strategy allows for a balanced approach, mitigating risk while aiming for moderate returns in the medium term.